Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast. Today is Wednesday, July 26, 2023. With us this morning, we have Lisa Lawson. Good morning, Lisa. Good morning, Lisa.
Morning.
Hi, John Kolb. How are you this morning?
I'm well. How are you?
I'm doing well. And Mr. Harvey Free. Good morning, Harv.
Morning, panel. How are you guys?
Good. Also, shout out to our very own Becky Alley. It's Becky Alley's birthday today. Becky is not on the podcast, however, she is wrapping up all of her month-end closings, and I presume she's going to spend a great celebration or birthday celebration somewhere special this weekend. So a big old shout out to our very own Becky Alley. Woo, 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 woo. There you go. So let's get into it, guys. We know we'll get into the topic of the Fed meeting. I know what they're going to do. John, you know what they're going to do. We'll talk about it probably in the last 2 minutes because that's all we're going to give it for today. But anyways, panel, mixed results in the home purchase market and home appreciation. Let's talk about it, panel. First, I'll go to Lisa Lawson. Lisa, the housing market still red hot. Metropolitan Detroit, southeastern Michigan, the entire state as well. Chicago, Cleveland, New York, to name a few cities with prices up in the range of 4 to 5% over last year. In other areas, the opposite end of the spectrum is going down. It's going down in Seattle, San Francisco. Prices down around 11% from last year. However, we are the Midwest. More stability usually in the Midwest, as reflected, up by 2.7%. Not a huge increase, but still 2.7% average throughout the region. But here in metropolitan Detroit, Lisa Lawson, Macomb County, Queen of Macomb County, it's red hot, correct?
Yeah, it's definitely hot. We're not seeing the price decreases like they have some on the West Coast. I will say in some areas they're slightly more stable. But you have to be prepared for all options, and it's all about location, location, location. It's very location specific. So where you might be able to get something for asking or slightly under, maybe up north in a slightly more rural area, a lot of these bigger cities or popular cities, Birmingham, Royal Oak, things like that, that's not going to happen. So it's all about location.
Yeah, hey John, hot cities around metropolitan Detroit remain okay. Like Lisa said, Birmingham, up and down the Woodward corridor, downriver, Trenton, Woodhaven. Still, we have a lot of hot areas here. Talking to some realtors, going out on meetings, having face-to-face meetings with realtors. It's still strong, and you still got to come in with your best offer. Still, prices are over asking. John Kolb, what are you finding?
Yeah, I mean, we're still seeing over asking prices. The unfortunate part is that some of these appraisals aren't catching up. The last couple appraisals that we've had on some of the purchases where they've been 17, 20, 30 grand over asking, the appraisals are coming in closer to the listing price than they are the purchase agreement price. And I mean, that's to be determined. But hopefully some of these values catch up so the appraisers can catch up. I did have a conversation with a realtor yesterday that said basically, John, the last couple of appraisals we've done with you have come in a little bit lower. And we had to explain that that's because everyone's going over asking. Look at what the listing price was and look what the appraised value was. The listing agent did a good job knowing the value of the market, and you guys went over, and that's why you put an appraisal guarantee. It's not my fault that your buyers didn't understand it before you put it together. They should have had a conversation with me prior to so that they knew worst case scenario. The good news is with people with really good credit, if you're putting 10, 15, 20% down and your appraisal comes in a little bit low, I can still get you into that house with the same amount of money out of pocket. No change in your total amount of pocket each and every month. Yes, we had a little bit of mortgage insurance on the loan, but with good credit people, this past guy, the insurance was $15.48 per month. So he was happy as a pig in you know what. But we're chucking along.
Hey, John, you would think, and let's talk about this panel. John, you would think that people would already know that when they go in over asking, especially $30,000 over, that the appraisal could most likely come into question, John. I don't understand. Maybe you could help explain it to me.
I mean, you can't explain it because you don't know the conversations that they're having on the front end with the realtors. Of course, we all want transactions to happen, to be started, but we also want all transactions to be closed. So my philosophy is make sure that you get them all the information, that all the outcomes that could happen, so that they're familiar with how it could close. But sometimes that's just not the way, and that's not the easy path of resistance there, where they just want to get it under contract and deal with it when it comes down the road. But it is what it is. We're moving along. Like I said, we had the closing yesterday. That value came in $17,000 low, but the buyer was very, very happy. And after long deliberations, he's an attorney, so we had deliberations. Long deliberations, he came to realize that the appraisal was actually a good appraisal.
Well, I love that. And also people out there listening around the world, in Ireland, Scotland, where they just completed in Great Britain, where they completed the Open Championship and crowned the champion golfer of the year. Harvey Freed, it's about education. It's about letting people know what's going on in the market. And again, I said to John, Harvey, as you heard, you think people would know that. But let's talk about this, Harvey Freed, and getting people prepared. You got to have those conversations. I just got off the phone with a realtor partner of ours. One of our clients is buying a condominium in Novi. So I asked who the condo association was. We've got to get that checked out. They also now have switched it up, Harvey Freed, where they want to make a purchase without selling their home. Well, we got to throw it in park right now. And then what do we have to do, Harvey? We have to make sure that they qualify with not only the new purchase, but their existing home with taxes, insurance, everything involved in that, Harvey. So it's just not as simple as, hey, I found a condo and I want to move into it, right?
Nothing's that simple in real estate, and everything can be going perfect. And most of the transactions are extremely smooth, but when they're not, they go sideways real quick with all sorts of different things. I ran into a ready to close on August 2nd, next Wednesday, and sure enough, the seller side, the divorce isn't finalized yet, and we all just found out. A little shocking. Lady at a title company this morning, who's also a real estate agent, told me.
Hey, Harvey, let me I got to interrupt you.
Yeah.
Was that the same transaction that the guy nickel and dimed you on a rate that really never existed, but we gave in because that's who we are?
Well, yes, that is the same transaction. So we're
sure it is.
Our clients properly. Interesting conversation I had with the lady at a title company this morning. Turns out she's been a real estate agent for over 10 years, and she got away from it as she was raising the kids and didn't have as much time. She wanted something steadier. And she said to me, Harvey, the best thing I ever did for my real estate career is work at this title company, because she's learned all the behind the scenes and everything else that's involved in a transaction, not just being a real estate agent and filling in the blanks on a purchase agreement or getting a listing. Now she understands trust and wills and mortgage payoffs and divorces and everything that could come into a transaction that could sideways a transaction, Harry. And we talk about these conversations. You need to have more better conversations when you're dealing in the world of real estate, because there's lots of different things that can happen in a transaction.
Well, seeing as how more better is really not a term that I like to use, Harvey, I'm going to stick with you. Reasons why not to waive a home inspection just happened to me again this past week. Sewer line inspection, Harvey, go with you on this. Discuss real life examples that one of our buyers, familiar true story, had a $30,000 sewer line repair. And if they didn't have the sewer line inspection, Harvey Freed, they never would have known. As they say, you know the rest of the story. There are many, many, many out there. Right, Harv?
Yeah, lots of different stories out there. Ran into one too, Harry. They did a pass-fail and found a faulty sewer line, $15,000 estimate to repair it. And now the buyer was able, even though it was in a non-negotiation type of transaction, he was such a strong buyer, so the sellers didn't want to lose him. And sure enough, they negotiate a lower price, a seller's concession. And now I know he's moving in next month, but they're going to repair the sewer line before he moves in. Yes.
Yeah, and Lisa Lawson, same topic. It make it like, if a seller wants to, I'm not saying the seller hit anything, but why would the seller want to pass giving a concession or help out with that? Because all of a sudden that news travels with that property, right, Lisa? If
Correct.
One buyer goes in and they find out that there's a bad sewer line or there's something going on with the pipes or it's a bad roof or whatever, that news travels with that property. So you're better off, if you're a seller, going ahead and taking that offer and helping the buyer out on that, right?
Yeah, I mean, otherwise, I mean, if it's a known issue and now the seller knows about it, they have to update their seller disclosure to disclose it. So, I mean, obviously, if they can close that deal and they're willing to get, part with some concession and everybody's happy, then that's obviously the best recourse.
There's no question about that.
Yeah.
And Lisa, listen, once a seller knows there's something wrong with the house, it might come as a shock to them. It might not come as a shock to them. They should, my opinion only, not speaking for anybody else, is they should hurry up and do whatever they have to do to sell that property. Because again, the news stays with that property. Now,
Or
it has to be or fix it for sure. But
Right.
they're going to have to fix here. But if they're not going to go through with that transaction, then the burden falls upon them. And maybe they can negotiate a 50-50 split with the buyer or whatever
Right.
it is. But you have to address it right away. You can't just say, oh, I'm not going to do anything, because if you're a seller and you say, I'm not going to fix it, guess what? Nobody's going to buy that house knowing what they
Right.
know. And like you said, they have to point it out. Let's go to another topic. We're getting together with a lot of our realtor partners now. The mantra is out there, John Kolb and Lisa Lawson, stick with you. Don't quit on the home shopping process. It's tough to get back in when you're out. Stick with the process and be diligent, be educated. Just some of the advice from our realtor partners, Lisa.
Yeah, I mean, it's funny you say that, because literally the call that Harvey transferred to me before we went live was a client I was working with a year ago. And I told them then not to give up. And now they want to get back in. So, I think people were frustrated, right? And the home buying process isn't easy. We always talk about it. There's a lot of information. You've got to make some tough decisions. Sometimes you have to make those decisions quickly, but there's nothing like being a homeowner, so it's definitely worth the journey.
And Lisa, update us what's going on in Macomb County while we have you.
I am literally sitting at Realty Executives Hometown right now, and quick squeezing in this podcast before my closing at noon for some repeat home buyers that I've worked with previously. So they were nice enough to lend me their conference room here, but I know people are going to be showing up here in a few minutes. So we're really busy. Tons of purchase business in Macomb, still new construction available in Macomb. So if you're not finding exactly what you want out there, build. It's okay. You'll move in the beginning of next year, but there's a lot of opportunity out here.
Hey, John, going to you on this, you're seeing a little pickup in purchase business. What are you seeing out there, and why all of a sudden, in your opinion, all of a sudden there are people, either they got out of the market and came back in, or they stuck with it? What's the story on that for you?
I think people are just realizing they may have missed the boat. The prices kind of have capped out a little bit, and they were trying to see if they could go higher, and now they're saying, okay, well, they've kind of tabled off a little bit, so we got to get the max that we can out of the price of our home so that we can move. If you want to move, now's the time. You're going to pay a little bit more on the home that you buy, but you're never going to get more money for what you're trying to sell than right now. Now next year, maybe something different, but in this 2023 calendar year, now is the time. When we come into, we're starting to go back to our progression of how things used to be before 2018, where we're going to see, things tail off come fall and winter, and it'll be a cold, dry winter with, waiting for the housing market to open back up in the spring of 2024. So now's the time to get your house on the market and sell before kids have to go back to school, and if you have to switch school districts.
Yeah, that's a great point, John. I think that's and as Harvey knows, we all know this, that the push is here, that they want to get the kids in the school district, Harvey. They got to get them signed up. You got to take that paperwork over to the school district and get yourself in. But the way I see it, Harvey, and then we'll go to our last topic for the day. I want Lisa to get out and go to her closing. We want to wrap this up in another 5 minutes. But Harvey, what we're seeing right now is that there's a frenzy coming through the end of the summer, probably through the end of September, through the middle of October. What's going to happen after that? I think it's anybody's guess. But Harvey, in your opinion, again, we're not going to hold this to you. You're not a bad weather person on predictions. What's going to happen in the fall,
Great point, Harry. What's going to happen? Fed meets today. If they bump up 0.25%, you can see actually a reduction in mortgage interest rates next week or starting on Thursday or Friday. So keeping our pulse on where this inflation is going to go. I think it's going to be steady stream ahead moving forward over the next 24 months. And if we happen to catch a break and these mortgage rates drop and the Fed funds decides to reduce, and more importantly, the mortgage markets just come down because there's not a direct correlation there. So we see really a steady stream of business with really the outlook is a lack of inventory will continue. Some of the buyers out there who have gotten out of the game or they say, I'm going to wait till the rates drop. We continuously are urging, do not do that. If you're a buyer in today's market, if you wait, when rates drop, you're going to have double the competition, maybe triple the competition. And I'm looking at an article here talking about appreciation across the US. Homes are appreciating in the Midwest. Find out again, maybe the only place homes are in appreciation, you're not seeing it, is in the San Francisco area. But other than that, across the US, homes are appreciating. And if homes aren't appreciating in an area, maybe there's an opportunity for you to come in without overbidding and definitely making an overzealous purchase.
I agree with that, Harvey. And if people don't, especially in the Midwest and Metropolitan Detroit, if they do wait, houses are going to appreciate. What does that mean? They're going to pay more next year rather than paying less this year. That's not, look, that's not the way it should work for you. But anyways, lastly for today, and I'm going to go to John, then Lisa, Harvey, and I'll wrap it up. But lastly for today, John, our favorite subject, the Fed meets today, probably will announce another 25 basis point Fed funds increase. That will be the 11th increase since March of 2022 and the highest since January of 2001. That's over 20 years. So Harry Glanz's opinion, what does that mean? Really, nothing, since the market has already considered this will happen. Number two, what should the Fed do from here? Nothing. Please stop after this and wait, okay? And C, John Kolb, how will this affect home buyers who are already in the market, ready to buy? Easy answer. It's not going to affect them, okay? Panel, last words. I'm going to John, Lisa, then Harvey, and I'll wrap it up. John Kolb.
I mean, I'm not quite sure what to say there. You asked a bunch of questions and answered them at the same time, and I mean, I agree with everything.
It's just what I do. It's just what I do.
It's just like you ride the fence. It's all good. I love it.
There's no fence. There's no fence riding there, John Kolb. What do you think's going to happen?
I think you're right. They're going to raise it by 25 basis points when they shouldn't. They just got to sit on their hands and do nothing. But they're not going to because they are too prideful and nobody's really looking out for the median class out here. It's they're out for themselves and they're trying to make a point, and that what they've said and what they're going to do is they're going to continue to push that issue. But you're right, they should not do anything. It's what is happening right now when they raise it by 0.25% is not going to affect anything. It's not going to affect the rates. It's not going to affect anybody out there buying or selling. But what could happen is if they didn't do anything, it would help spur the rates a little bit lower, which would help everybody out there. But like I said, they're not out to help people. It's a conspiracy. You know my thoughts. I'm out.
I love that from John Kolb. I'm going to go to Lisa Lawson. John Kolb, we've only agreed on this since they started doing it. I love it. Lisa Lawson.
Yeah, I couldn't agree more. I mean, what they should do is leave it alone. Don't increase it. Just let it be. Let the rates naturally trickle down over the next, month or so. But it's not going to happen. They're probably going to raise it that quarter point, and we're all going to be like, what'd you do that for? We've all talked about it, and it's crazy. People call, oh, it's a quarter point. So does my 7 become a 7.25? Does my 6 become 6.25? No. Actually, the Fed rate doesn't control mortgage rates at all. It only controls short-term lending, credit cards, car loans, things like that. So, be educated. Don't let them, do any scare tactics. And, unfortunately, we're all in the same boat. We all have to deal with it, but it is what it is.
Yeah, Harvey Freed, you're up next. But in the immortal words that Lisa Lawson quoted of Paul McCartney, let it be. Harvey Freed, what's up?
Let it be. I'm a numbers guy still, Harry. The difference on a $100,000 loan at 7% or 6% is $68. Well, I had 2 glasses of wine at dinner the other night on Saturday night. My girlfriend had 2 glasses of wine. That equaled with tip about $72. So again, don't let these mortgage interest rates affect this ultimate goal of home ownership. $68, whether the rate's 7% or 6%. On a $300,000 loan, it was 204. So again, it's about one night out at a restaurant. If you got a babysitter at home with the kids, it's definitely over $200 a night. So again, focus on the numbers, stay within your means, and don't let the higher interest rates get you off the tracks, because you really need to buy that house for your family.
Well, Harvey, I'm glad that you brought that up. You're the economical type. I'm glad that you and your lady are drinking that box wine and saving money. That's good. We appreciate that. That's good. Drink that box wine. I wouldn't know, but if it saves you $68 a month without drinking the wine, you can afford the house. That's what Harvey's suggesting. Good job, Harvey Freed. Well, listen, panel, I appreciate you. I appreciate Lisa Lawson, Harvey Freed, John Kolb, Roberto Beauchene in the booth. He's our producer director. Happy birthday to Becky Alley, July 26th birthday. We appreciate her. And to all of you listening all around the world, this is a hardcore mortgage podcast for July 26th, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation. We appreciate you, and we'll see you soon.
Hopefully Roberto can edit this.
Bob, where are you? I'm cutting out. Bye, guys.
See ya. Bye.